Every time your paycheck goes up, your expenses seem to creep right up with it. You end up running in place, covering your bills, but never actually saving any money. To get out of that cycle, we are going to walk through a proven mathematical formula designed to help you break away from the rat race and build long-term wealth. We can do it in about 6 minutes. Step 1. Grab a pen and a piece of paper and write down your exact monthly take-home pay. Infinity investing focuses on generating enough passive income to control your own time and take care of your family. It prioritizes the ability to act when you want to, without needing to ask for anyone's permission. When you follow the blueprint we are about to build, you stop being tied to a paycheck and start owning your time. Now that you have your monthly income written down, we are going to divide it into 4 specific mathematical categories. This pie chart calculates a hypothetical $10,000 monthly income. We cap the first slice at 70%, or $7,000. That is the absolute maximum you will allocate to all of your basic living expenses. The next 10% goes toward giving. Consistent investors share a habit of being voracious givers. If cash is too tight right now, you can substitute this by volunteering your time. The third slice is 10% dedicated exclusively to paying down the principal balance of your consumer debt. This goes above and beyond your minimum monthly payments. The final piece of the chart clicks in at 10%. This is capital reserved exclusively for buying income-producing assets. If your current living expenses consume more than that 70% limit, the most efficient fix is to increase your top-line income. Pick up a side gig, like real estate wholesaling, rather than trying to aggressively slash a budget that is already tight. Locking your money into these 4 categories prevents lifestyle creep, turning every paycheck into a wealth-building mechanism. This flowchart illustrates the losing loop. Your income drains into liabilities, like credit cards and car loans, which you then use to cover your basic living expenses. When debt obligations cannibalize the cash you need to survive, the financial situation becomes unsustainable. Watch what happens to the chart when your consumer debt hits 0. The liabilities box breaks, and you immediately route that original 10% debt allocation directly into your asset buying bucket. Eliminating your consumer debt doubles the speed you can buy financial freedom. You jump from a 10% acquisition rate to a massive 20%. Now let's put that asset bucket to work. For your first stage of investing, hold 10% in liquid cash equivalents and put 90% into income-producing stocks. To get the most out of those stocks, we apply a specific method called the wheel strategy. It pulls multiple streams of income from a single asset. This diagram breaks down the process. Step 1, you write cash-secured puts. This means you get paid a premium for agreeing to enter a stock position. In Step 2, once you own that stock, you collect dividends. For Step 3, you write covered calls against the stock you now own, generating a third stream of premium income. Finally, Step 4 captures short-term capital gains when the stock is eventually called away. Mastering this single, cyclical strategy establishes 4 distinct income streams within a standard stock account. As your net worth grows, your portfolio requires a structured roadmap to manage the increasing complexity. You start in Stage 1 with that starter stock bucket. As you progress to Stage 2, the goal is to reach $50,000 across 3 distinct investment categories. Once your assets exceed $150,000, you enter Stage 3. From this point on, you apply a strict allocation ratio to every new dollar invested. This diagram illustrates that exact split. 30% goes into income stocks, another 30% flows into real estate or REITs. The next 30% goes to professionally managed money, and the final 10% stays in cash equivalents. Distributing your wealth across these 4 specific pillars helps protect your portfolio from market volatility and prevents you from making emotional decisions with your money. As those 4 buckets grow, the cash they produce starts covering 40, then 50, then 60% of your monthly living expenses. This graph shows the result of the strategy. The moment your upward trending asset income crosses your total living expenses, you hit the infinity threshold. The mandatory need to work for a paycheck is gone. Reaching infinity gives you the freedom to pursue your actual passions. Whether that is coaching high school volleyball or starting a community program, you are now working because you want to, not because you have to. You now have the complete blueprint. You know exactly how to direct your next paycheck, pay down debt, and balance a growing portfolio. This flowchart shows the winning loop. Your assets now generate a continuous flow of funds that covers your entire lifestyle. Let's put this into practice right now. Look at your notepad, take your monthly take-home pay, and calculate your specific 70-10-10-10 split. Check the show notes below to download the free Infinity Investing ebook to study the wheel strategy in detail. While you are there, leave a comment with your target Infinity number. This blueprint provides a specific, repeatable system for independence, beginning the moment you fund your first asset bucket.